Hey traders, Raghee here, and in this recap video we are going to look squarely at the crude oil market, and not for the rip higher that we saw on all the intraday time frames, but for where that rip higher took us on the daily and on the weekly time frames. And this is something that I think will help a lot of intraday traders, because they, as I've talked a lot about this the last few recap videos, knowing where you are in the overall scheme of things, meaning the larger footprint of the daily and even sometimes the weekly time frame, is very important as you try to determine what your directional bias is. And here, my directional bias currently up in this area is bearish. The closer I get up to what seems to be kind of a double top up here, let's take a look at the two Darvis levels up in here, almost pretty much at identical levels. And then the way in which we rallied off what is probably, this is likely it was oversold. It wasn't the oversold floor I was looking for, but it is certainly arguably a good solid level from which traders thought, all right, this is where we want to rally. So they did. A better oversold floor for me would be something like here or even here. Those would be better. This is a little bit more aggressive, but nonetheless, the market shot up and we find ourselves up in this territory. And so now I would tell most intraday traders that while we are not technically right at resistance, we are very close to it. It's easier for me to assess that this market is oversold than it is for me to say that there's still a lot of upside. So I could use indicators like two of my favorites would certainly be the simpler trading ready aim fire tool. Another one would be the more generic yet very popular slow stochastic. And I could see where we're starting to get some signals, but not the kind of lineup that I want, which would be one like this. You see how we're lined up like that? That's really ideal. But not too bad. I can see that the market's going to likely push higher, but what I'm looking for now is, are we likely to exhaust and push lower? Now, you'll see this is not an ideal area. We're not at the resistance level, just like we were at support down here, just not perfect. So I'll choose to go intraday, and that is going to be a setup where I'll look for a rollover. We did something very similar on the S&P today. And if you think about why crude headed higher, it's still a choppy market. I still think there's a chance we could head higher overall, but the reason we launched the way we did was that after President Xi's speech yesterday, and I'm kind of chuckling to myself because we didn't hear anything in that speech that we haven't heard before. We haven't heard anything in that speech that we don't want to be true. And yet, because it seems to take the teeth out of the trade war, that the market loved it. In fact, we ripped higher in the Nikkei, the Nas, the S&P, and the Dow during the Asian session. So the market loved hearing that particular tone. So the trade war, sigh of relief, sent equities higher, sent energies higher. And then another thing that I think sort of was a tag team was that while we're reducing the risk of a possible trade war, maybe now it's just like a trade arm wrestle between China and the US, Syria was in the headline, and that also, for a separate reason, was also very bullish. So two major reasons the market discounted in a hurry, in a single day, and that took us up to levels that we could anticipate might be overbought. And that's where we sit. So rather than trying to find the high, I'll look for where the intraday trends are rolling over. And in the premium video, we'll hone in on which time frame and which setup I like the best near term and even a little bit longer term, so that if there is a rollover to the downside in crude, we've got the time frame, maybe even into the Asian session, that's going to do it. I'll see you in the next update.